again, we had some small technical issues. So, we are going to be mixing fundamentals with technicals today. And that was after your request anyway. And we are going to be discussing a number of pairs. Now, in front of your screens, you have the US dollar index. It's the 4-hour chart. My name is Peter Yusuf, Senior Market Analyst at IronFX. With no time to waste, let's start commenting here. You can see, and it's very clearly distinguishable, a nice strong rise of the US dollar during today's European session. I have to highlight here that exactly the US dollar has hit, I would say, the floor at 103.05, at least for the US dollar index. On a fundamental level, we had yesterday the release of the US CPI rates. They were for February. They slowed down as expected on a month-on-month level as well as on a year-on-year level. It was characteristic that on a year-on-year level they slowed down from 6.4% year-on-year to 6% year-on-year. Now there are two sides of the same coin here. On the one hand, one could say that due to the slowdown of the CPI rate, there may be increased pressure on the Fed to actually ease its rate hiking path, its aggressive rate hiking path. On the flip side, though, 6% CPI is still pretty high, definitely far higher than the Fed's target of 2%. There's also a lagging effect which has still to kick in. So, on the one hand, it tends to, I wouldn't say solidify, but still enhance market expectations for a slowdown of the rate hiking path. On the flip side, though, it once again reminded us that there's still work to be done from the Fed to actually turn inflation back down to 2%. It's characteristic that Fed funds futures during today's early European session implied that the bank is to perform a 25 basis points rate hike in the coming meeting next week. And Fed funds futures imply a probability of around 80% for such a scenario to materialize. The big shift, though, of the market's expectations is noted in the sense that there was wide discussions last week about a possible 50 basis points rate hike. And that seems to be driven out of the picture and replaced by a 25 basis points rate hike. Now, on a more fundamental level, I would be noting that the mini crisis, which was created by the fallout of SVB and Signature to a second degree, seems to be easing. Overall, the market was tended to ease. I would note that definitely Fed Board Governor Bowman's statements that the US banking system remains resilient tended to be in that direction as well and seem to have had some effect. So, for the time being, there seems to be some stabilization. But, and this is a big but, the stabilization may be maintained if no other bank, major bank at least, crashes. And that's a possibility which, okay, it's a remote one, a remote possibility, but it's still present. And that could create some worries or reignite the worth of the market for the banking sector, actually operating within a high interest environment. I would be noting especially, but that's more on the European side, Credit Suisse. Its share price has been dropping, but Credit Suisse is so large, which could reignite the market worse again. And this time we may see contagion also on European soil. Now, on a technical level, if we drill out to the daily chart, and let's zoom in a little bit here. You can see yesterday there was a dodgy candlestick, meaning that the price action opened and closed at the same level. So there was no major market effect from the release of the US CPI rates for February, at least not on the US dollar. And I would say that was a result from the fact that the actual rates were in line with the predictions and the expectations of the market. Thus, it was more or less already priced in. Now, attention today may turn towards the PPI rates and the US retail sales growth rate. Now, both of them are expected to slow down. Actually, the retail sales growth rate on the month-to-month level is expected to drop into the negatives from around 3.3% to minus 0.3, which could once again re-enhance the weakening of the US dollar, or that possibility, that scenario playing out. Overall, though, for the time being, though, the USD seems to be on the rise. I would note also that a possible slowdown of the PPI rates as well as the retail sales growth rate would be in line with the slowdown of the CPI rates yesterday. And that would be providing some consistency about inflationary pressures easing and the demand side in general easing in the US economy, reflecting also possibly the effect which the tightening of the Fed's monetary policy may have had on the US economy as such. So that would be an issue for today, in my opinion, in the American session. In a couple of hours, it's due out. Don't forget that the US is now observing daylight saving time. So if some countries have not actually come into the daylight saving time, the US is going to be 1 hour ahead with their releases. On a technical level, we see that the US dollar, as we have mentioned, is on the rise, but failed to actually break above the R100 and 375. We tend to maintain a bias for the sideways motion to continue, given also that it has broken the downward trend line directing it. Note also the RSI indicator, which has been on the rise and is approaching the reading of 50. It's currently at, let's have a look, 48, 47.14. Okay. I would be adding here, I would like to see what the Bollinger Bands are actually saying. Let's have a look. And indicators, trend, Bollinger Bands, 20 moving average, standard 2 deviations, dark blue. Okay. Okay, the 20 moving average has been more or less reflecting exactly the drop of the US dollar index, has failed to actually reflect today's European opening where it has started to strengthen. And that's understandable that it has 20 periods in the past which has been tailing, and only 2 have been clearly in the greens. I would be also switching the moving averages from 100. Let's place them at 50. And the 200, I'm going to be switching it to 100. Note the cross here, which reflects exactly the drop, the bearish cross. But I think we are in a period where the stabilization is on. We may see even some bullish tendencies in the American session. And in that case, we may see the market sentiment and the fundamentals actually bypassing the financial releases. So it's going to be interesting to see how it plays out at the American Open. Nevertheless, for a bullish scenario, once again, we would require clear breaking of the 103.75 resistance line and the price action to start aiming for the 104.55 resistance level. On the flip side, should the index remain rather stable, and by the way, let's just add a title here, and that would be in black, bold. Even bolder. Okay, that's more readable. So, should we see a weakening though of the US dollar, say for example, if retail sales drop beyond market expectations or the PPI rates drop beyond market expectations, that could cause the US dollar index to drop, break the 103.05 support line, and start aiming for the 102.45. Okay, let's have a look also at the next pair, which would be Euro USD. Euro USD, which is practically reflecting, let's readjust a little bit. We could also no, I think that this format seems to be better. Let's readjust the positions. No substantial resistance or support line has been broken, at least not yet. So for the time being, the Euro USD has been dropping in the European session, and that's practically reflecting mostly the strengthening of the US dollar rather than the weakness of the euro. It's characteristic that the RSI indicator has dropped from the highs of around 65 to 50. Actually, it's 49.8. So that was a switch, implying that the market is rather indecisive. Don't forget, euro traders are starting to shifting their focus slowly but steadily towards ECB's interest rate decision tomorrow in the late European session. I would be noting that we expect the sideways motion between the R1 1.0790 and the 1.0655 to be maintained for now. I would be noting also that despite this peak here, I'm going to maintain the R1 based on this peak here. And there is a narrowing of the volatility. Should the bears take over, we may see the price action of Euro USD, say for example the US dollar extends its strengthening. Euro USD may drop by breaking the 1.0655 and start aiming for the 1.05. On the flip side, should the bulls take over, despite that seemingly being remote, but it's still a possibility, we would require the pair to rise above the 1.0790 and start aiming for the 1.0925. Okay. Let's have a look at GBP USD. Okay, GBP USD is actually right now testing the 1.2115 support line. It has been broken. And has been broken just to the downside once again. So it's being maintained for now. But it's going to be interesting to see whether there is a clear break or not. If there is a clear break, the red color remains and the 1.2115 remains as a resistance line. If, however, it bounces, then we may see a slight shift lower of the 1.2115 and turning into green as a support line, while we will have to go searching for a new ultimate resistance line. Overall, though, I would be changing slightly some levels. Definitely this level is a new support line. And we could actually go a little bit lower here. In green. Let's go to the upside and see what we've got. Going further back here. Have a nice resistance level here. Also tested here. Let's keep that. And that's being set at 1.2595. What about 1.26? Okay, seems valid. Readjusting. Now the R2 is now being placed at 1.2435, which is a level which provided resistance here. It was practically the upper boundary of the sideways motion around mid-January until the beginning of February. $1.2355. Let's reverse this. 1.2255, sorry. Level which provided resistance here and support here and resistance again here, so that's pretty valid in my opinion as well. Now moving to the first support line, which would be at 1.2105. The second support line, which is placed now at 1.1925. Yep. Note how it beautifully provided support 1, 2, 3 times in a row and resistance here, or at least commotion. So it's a level to keep an eye out, and definitely the lowest show in our chart, which is the 1. Let's have a look. 1805. That's it. Now we have shifted slightly this one to the lower point. We have recalibrated the resistance lines and the support lines. I would be expecting practically the sideways motion to be maintained. There is one critical point though. The pair must not break below the S1, the 1.2105, and that's why we have actually marked that level as the first support line. Should the S1 be broken, then that would allow practically the pair to enter a bearish mode. By the way, it's interesting to note that there was this upward trend line which has been broken, and it was actually intensified here. Widening it, mood intensification. It's very, very interesting how the pair corrected, stabilized actually, breaking the first upward trend line and then the second. However, the second was already invalid, so it's out. So we tend to maintain a bias for a sideways motion unless the price action breaks below the S1 1.2105, and look at it going at the S1 once again. It's another test. Should the S1 be broken clearly and the pair starts aiming for the S2 1.1925, that would allow us to draw a nice downward trend line showing us the limitations of the downward movement. And definitely that would force us to switch our bias for the sideways motion in favor of a bearish outlook. The RSI indicator is still at 55 but dropping. So I would like to see it lower before actually switching into a bearish outlook. Should the bulls regain power, we may see the price action of cable bouncing on the 1.2105, aiming, if not breaking, the 1.2255, and that would allow practically the gates to be opened for the 1.2435. The bullish outlook for the time being is the least probable scenario, though. Please keep that in mind. For the time being, we see the possibility of a stabilization remaining, yet we issue also a bearish warning here. Let's have a look at USD/JPY. But before moving to USD/JPY, it would be interesting to note that on a fundamental level, we had already one event, and that was interesting. It was the release of the UK employment data, which more or less supported the idea that the UK employment market remains rather tight. It was characteristic that the unemployment rate actually failed to rise. It remained stable, while the employment change figure dropped, but not as much as the market expected. So there is a relative tightness in the UK employment market, which may allow for BOE to proceed with a rate hike in its next meeting. That would be on Thursday, next Thursday, in 1 week time, sorry. I would, though, highlight the release of the UK CPI rates on Wednesday as the main catalyst behind BOE's interest rate decision, in my opinion. And for the time being, though, it seems that the release as such tended to provide some support. Other than that, the second issue I would like to mention would be Jeremy Hunt. It would be the spring budget statement. Should we see the UK government actually widening its fiscal policy, that could provide some support for the pound. Let's have a look at USD/JPY. USD/JPY, which has been dropping. And that's interesting in the sense that when we last checked it, let's readjust though the labels before we discuss anything. And definitely we have the breaking of the 135, which has already even served as a resistance line. So this has to be corrected and set in red. Let's go hunting for a new ultimate support line. That would be placed on this true. Also providing support here and here. Seems to be valid in green. 128. Let's change the labels. Now, USD/JPY had some slight bullish tendencies during today's Asian session. Okay, we have to widen this. During today's Asian session, which was a result of the weakening of JPY mostly. Now, on a fundamental level, we note BOJ Governor Kuroda's comments that practically BOJ should maintain its ultra-loose monetary policy unchanged. Yet I would be also highlighting that in today's fundamentals, I think the main headline we keep an eye out would be the wage increase agreements from Japan. And should the wage price increases actually be substantial, and they're expected to be substantial, that could provide some support for, it's interesting, some support for JPY. On the other hand, let's not forget that JPY is a safe haven, and should exactly the safe haven be fed by market worries about the banking sector? By the way, mind you that the banking sector in the European session was hammered after worries for Credit Suisse. But even that, note how it has strengthened JPY substantially. And it's interesting that it has strengthened JPY more than it has strengthened the US dollar. That's why we see a reversal and downward movement. Now let's correct the labels and have a discussion about the direction of the pair. Making a start with the SR3, which is now being placed at 139.90. The R2, which is being placed at 137.80. The R1, which is being placed at 135. The S1, which is being placed at 132.85. and the S2, which is being placed at 130.40, and the S3 at 128. Once again, fundamental level, we're highlighting two aspects of JPY. A is monetary policy. The comments made by BOJ Governor Kuroda tend to maintain the dovishness and thus may have had a bearish effect on JPY, causing USD JPY during today's Asian session to rise slightly. On the other hand, though, we have also the safe haven nature of JPY, which the current crisis and the uncertainty in the banking sector, both on the US and the European level, tend to provide some support as investors look for a refuge. And we can see that in today's European session, how JPY is strengthening in contrast against the US dollar, despite the strengthening of the US dollar as such. For the time being, on a technical basis, we tend to maintain a bias for the sideways motion to continue between the 135 resistance line and the 132.85. Yet, should the bears feel confident enough, be strong enough to overtake the pair's direction, that could lead USD JPY to break below the 132.85 and start aiming for the 130.40. On the flip side, should the dollar strengthen more than the JPY, we may see the pair reversing direction once again, breaking the 135 and start aiming for the 137.80, a level which provided resistance here. It was a very, very interesting peak. The RSI indicator is dropping. It's currently at 38, which tends to imply that the bearish sentiment is guiding the pair, and mind you that it has still a way long way up until the low Bollinger Band, so the path is open for the bears to actually break below the 132.85. Once again though, as long as the price action remains between the 135 and the 132.85, will remain on a bias of a sideways motion. Let's have a look at USD CHF, the other safe haven pair. Okay, see here we see a reverse movement. Definitely this has to be widened down here. And this has to be, okay, that remains. This has to be turned into resistance line, given that the price action is below it. Let's go hunting for a new support level. I would be raising this up to here. Maybe a little bit lower. To mark this peak here, this show here. Okay. Let's go hunting for a new ultimate support line. Nope. I'm taking it a little bit wider than the rest, just to have these two touches here. And that would be in green, the 0.8930. Readjusting the chart, narrowing it, raising this a little bit here. Okay, let's readjust the labels. The R3 is now being placed at 0.9545 as it was at the R2. The R2 is being placed at 0.9435. Have a second look at this. That's correct. Okay. The R1, which is now being placed at a little bit narrower. The R1, which is being placed at 0.92. Let's have a look. 95. The S1, 91.60. Sorry, 0.9160. The S2 at 0.9055. And the final support line, which is now being placed at 0.8930. Locking everything in. Let's make a small comment about direction. Definitely the downward motion is over. That's clear. The price action has even broken above the 0.9160 and is rising strong. The RSI indicator is nearing from below the reading of 50, so implying that there is still some ground to be covered before the sentiment becomes clearly bullish. I wouldn't be surprised though to see USD CHF continuing to rise and aim, if not break, the 0.9295 should the US dollar continue to strengthen. It's characteristic how the difference between, say for example, USD CHF, which is also safe haven, and USD JPY. The USD JPY is weakening as the JPY is stronger than the US dollar, while USD CHF obeys to the commands of the USD, of the greenback. Okay, let's have a look at AUD USD. AUD USD, which was unable to make a clear break. We had an upward wedge yet the sign here is clear. The US dollar is strengthening, AUD USD is dropping. By the way, it was interesting also the fact that AUD USD failed to get substantial support from the actually pretty good figures coming out of China. We had the release of the industrial output growth rate, which, okay, it accelerated, but it missed its target. Nevertheless, the whole release was colored in the positives because we had also the urban investment growth rate, which accelerated instead of slowing down, while the retail sales growth rate of China also accelerated substantially, more or less implying that there is a strong internal demand factor within the Chinese economy, which could provide a cushion of safety for Chinese businesses. Now, on a technical level, we note that we had an upward wedge, but that has been broken. So the sideways movement bias remains between the 0.6695 and the 0.6585. Now, besides the US dollar factor, we have to also bear in mind for the Aussie side that tomorrow during the Asian session, we're getting Australia's employment data for February. And the prognosis is pretty good actually. We expect the unemployment rate to tick down, while the employment change figure is expected to get out of the negatives and rise above 40K. So that would imply some tightening on behalf of the Australian employment market. And in turn, this could provide more reassurance for RBA to continue on its rate hiking path, despite the political criticism it gets. So I think that definitely one thing to look after would be US dollar strengthening for this pair. But I would be also looking over the release tomorrow during the Asian session, which could provide some support for the Aussie. As again, on a technical level, we maintain as a base scenario that the sideways motion between the 0.6695 resistance line and the 0.6585 support line is to be maintained. For a bullish outlook, we would require a clear breaking of the 0.6695 and the price action to start aiming for the 0.6855 at last. While for a bearish outlook, we would require the pair to drop all the way down to the S1, 0.6585, break that level, and that would be a signal that we have to switch our bias for a sideways motion in favor of a bearish outlook and start aiming for 0.6460. Okay, let's have a look at USD CAD. Interestingly enough, the 1.3665 level has provided support, so let's switch that. Let's go hunting for a new ultimate resistance line. We have to switch to the daily chart. I'm taking this peak here. And that would be the, in red, 1.4140. Back to the 4-hour chart. Readjusting. Let's correct also the labels. Now USD CAD, which has been stabilizing somewhat, and definitely a risk of market sentiment. It's not exactly in the CAD's favor. Let's correct the labels. On the other hand, a cat trader should always keep an eye out also for oil prices, given that that Canada is a major oil producing country. And finally, the R3 placed at 1.40 to 140. Sorry for the mistake. Here you go. Nice. For the time being, we tend to maintain a bias for a sideways motion to continue, given that the price action was unable to break clearly below the 1.3665, and that allows practically for the sideways motion to continue in our opinion. It's as if the pair hit a floor at the S1 twice, and has escaped the bearish tendencies. Also, the fact that the RSI indicator has reached the reading of 50 also implies a rather indecisive market. So the main scenario is for USD CAD to maintain its price action between the 1.3805 and the 1.3665. That should be it from all of us here at IronFX. Best wishes for solid trading.
Everyone, today we are going to talk about risk sentiment. Risk sentiment is a term used to describe how market participants such as traders and investors are behaving and feeling. Are they seeking risk when they feel positive about the economy, or are they seeking safety because they feel the economic outlook is gloomy? What traders buy or sell involves balancing how much they are willing to lose with how much they want to make. Risk sentiment can be viewed as an expression of traders' and investors' readiness to take on risk. This entails understanding risk and the market's risk attitude, as well as determining how much risk you are willing to take with your money and assets in a certain time frame. Risk sentiment is the general mood of the financial market. The exposure to the possibility of danger or loss is referred to as risk. When you start a position in the market, you are taking on a risk because there is a chance that your trade will result in a loss. Traders are sensitive to the two fundamental emotions that drive their decision making: fear and greed. The financial markets then play on this risk sentiment of traders. With traders speculating on the movement of currencies or other assets in the short term so they can enter and exit trades fast, risk sentiment is very important. Understanding how markets respond to risk or expecting how the markets will change will help you to determine your trades and trading strategy. Thank you so much for watching us today, guys. Bye-bye.
Hello, hey guys, hi. Hey. Hi Arun, hi Juha. Hey, hello Namdi, hello Ronald, hello Stephen, and hi to the rest. Hey, thank you very much for joining today on another IronFX webinar series. Hey, give it a moment for the others to join before we begin this webinar. Okay, give it a moment. Okay. Okay, let us begin. Okay, welcome. There are more people joining. Thank you very much. Hey, let me know where you guys are tuning in from. Where are you guys from? Well, for me, I'm from Singapore. It's around, okay, it's 6 p.m. right now. 6 p.m. Oh, Nigeria, Finland, UK. Very, very nice. Wow, all over the world. Belgium. Wow, all these places. I got to go there one day. Okay, nice. Let us begin. Okay, today will be very, very technical. Very technical on the multiple pivot point strategies. There are quite a few that I would like to share with you. So let us begin. Okay, as usual with the introduction, my name is Chen Yongjing, and I am the investment analyst for Everest Fortune Group. So we are also the finalists for the best Forex research for 2019, 2020, and 2021. We also the finalists for the best equity research for 2020 and 2021. Okay, a disclaimer first, all trading involves risk. It is possible to lose all of your capital. And the agenda for today. What are pivot points? The different types of pivot points, and what time frame should you use for pivot points? Also, we will be teaching how to add them into your strategy. So later I can ask you guys what kind of strategy you guys use, then I can see what kind of ways we can implement it into your strategy. Okay, my hair is a bit messy. Do apologize for that. Okay, what are pivot points? Okay, a pivot point is like, let's say the chart, up, down, up, down. So where are the pivot points? A very simple pivot point is the top and the bottom of the low and the high. So you can call it as the previous high or the previous low. Okay, a pivot point is an intraday technical indicator used to identify trends and reversals mainly in equities, commodities, and the Forex markets. So all these reversals, what I like to do, I personally use something very similar to pivots. So with this, the high and the low, I like to catch that reversal back in. But of course, with some confirmation. So maybe later I can share on how I do that. Okay, pivot points are also calculated to determine levels in which the sentiment of the market could change from bullish to bearish, vice versa. Okay, the high, just take note, the high, it indicates the highest price from the prior trading day. Hey, I see more of you guys sleeping in. Hi, April. Hi, Ayman. Hello, welcome to the webinar. Okay, as I was saying, the high, hey, hello. Hi, man. Okay, as I was saying, the high indicates the highest price from the prior trading day. The low indicates the lowest price from the prior trading day. Okay, the day traders calculate pivot points to determine levels of entry, stops, and profit taking. Later, I'll be turning on trading view. So I'll show you guys the pivots are the multiple pivots. I think I'll be presenting for today. Hey, good to be here. Yes. Lucky you are here. Welcome. Annie Chukwa Kingsley. Okay, I'll be presenting today 4 different types of pivot points. The standard ones, which are the most basic ones, the Camarilla pivot points, which I think I like it. I like this pivot quite a lot. And the Fibonacci pivot points and the Woody's pivot points. So all these are just improved versions of pivot points. So the first pivot point, this one, the Camarilla pivot points. Okay, it's actually refined form of existing classic pivot points formula developed by Nick Stott, and it's a better use of Fibonacci numbers in the calculations of levels. It's also used to calculate intraday support and resistance levels. Okay, let me open it up. Let me open the charts before we begin. Okay, just to let you guys know, also we have an IronFX YouTube channel where you can watch the live TV and the past playlist. You can take a look. You can learn quite a lot of things right here on the IronFX YouTube channel. I'll just paste it over into the chat to everyone. Okay. Okay, we start with the traditional pivots first. Okay, traditional pivots is actually, it looks very confusing. There are multiple resistance 2, 1, 2, 3, 4, 5. Support 1, 2, 3, 4, 5. So it's in a way, it's very, very similar to how a Fibonacci works. So if you take a look, if I turn it off, how a Fibonacci works, can from the top all the way there. So it looks very similar. If I turn it on, you see some lines coinciding, especially this area. So it's in a way you can actually trade similarly to how you use a Fibonacci from one area to another area. Okay, this is just the traditional one. You can actually find it in the indicators under pivots. So you can actually get the pivots point standard. Okay, what's the one that I was going to present is the Camarilla pivot points. Okay, let me move the screen a bit so I can see everybody. Oh, more people are joining. Hey, welcome, man. Welcome, Hanin. I just saw you sleeping in. Okay, so we are on this. Okay, so for resistance, for these pivot points, for this pivot, the Kama, let me type it out. Okay, excuse my pronunciation. Camarilla pivots points. Okay, so with this, we have the supports 1, support 2, supports 1, support 2, support 3, support 4. Okay, you said that the email said start time was 10 AM GMT. Yes, it's right now it's 10 AM GMT. It's 6 PM. Well, for my timing, it's 6 PM GMT plus 8. So it's slightly different. No, it's 11 AM. I think, can you please, Stephen, can you please say what you meant against? I think I'm a bit confused at your statement. Okay, it's the Camarilla pivot point. Okay, so we also have the resistance 1, resistance 2, 3, and 4. So what I like about this is I actually noticed that you can actually backtest with backtest. You can buy from the resistance you can buy from the support and with the stop loss below. So example like this. Okay, now is 11 a.m. Email said it will start at 10 a.m. Okay. I'm not sure about that. I think it might have been the IronFX email site issue. GMT timing, just let me clear this up. Now it's 11 a.m. GM email said it will start at 10 a.m. Well, I think it's the GMT plus 0. Do you mean that, Stephen? Okay, give me a moment. Okay, let us continue. I think I'll get back to you regarding that again later on. Okay, so yesterday I was actually in a EU shorts. Oh, you are in summertime. Okay. I think I'm a bit confused on the timing too. Later I'll check it out. Okay, so what do we have? Give me a moment. Okay, so we have this area. You can see this area. This is the support 2. It bounced up and it actually coincides with an area where I was actually trading yesterday. So I was actually in a short. I was in a short over here, somewhere here, with my take profits 1 here and take profit 2 at this candle right here. But my final take profit didn't got hit. Well, it's fine. Later I'll explain this trade out also. So I actually like this pivot point a lot, this Camarilla pivot point. So you can see on as soon as the what do you call it, the supports for, this is the supports for the previous day, or the resistance for that it gets broken, you normally trade with the trend. So when price goes below it, they continue selling downwards or upwards. So this one, it's the support for that is broken. Let me make it smaller a bit. Okay, let's take a look at old data for some back testing. So you can see here, resistance 4 broken, price continues going upwards. So I'm sure you guys are thinking right now, why not I set a buy stop here, a buy stop with my stop loss at the bottom, maybe here at resistance 3 for price to continue going upwards. Isn't it possible? Please, audio echoing. Okay, let me test the mic. Hi, mic test. I think someone is having issues. Can you hear me clearly? Can you guys hear me clearly? Where will this recording be uploaded? Not here, all clear, no audio issue. Okay, this audio recording, they might upload to the IronFX YouTube channel. They might. So I remembered I saw my, let me take a look. Okay, all clear. So I think for you, for audio Kyun, it might be your speaker issue, or you might want to use a earpiece regarding this echoing issue that you might have. So they okay, no problem. Hey, thank you. Okay, nice. Let us continue. Okay, so they might actually upload it on YouTube. I saw my previous live trading analysis was uploaded online too. So it might take a few days. Give them some time to upload. So let me clear these things out. Okay. So some of you guys are thinking probably I can set a short position right here. Upon breaking the support 4, my stop loss, to be safe, I can set it at the supports 1 and let price continue downwards with at least, as usual, a minimum of 1-to-1 risk to reward. Minimum 1-to-1. Never go lower than that. You will be especially 0.8. All this, just ignore. Do not take a trade. So we can see, let us see by the end of this session where price on the euro dollar might be heading to, since it has already broken the supports for pivots. So for this, right, coming back here, just now the back test, to have a safe, very safe one, we have our stop loss at the first resistance, the red line. Wow, even more people are joining. Wow, we have quite a lot of people today. Okay, let us move on here too. Okay, this is a scenario that it did not work out well. So you're taking a shot. You're taking a shot. Let's say you take a shot here, a stop shot. Okay, it's not here. Okay, it's here. This scenario did not work out. So with your stop loss there, and then the maximum it even went was in a negative risk to reward before price reversed all the way up. So you cannot just trade solely based on one indicator, especially the pivot indicator. It's best to combine multiple forms of indicators or your own trading methods before you enter a trade. This is a very good example of a beginner mistake. If you actually enter it right here, and then it just hits your stop loss, although you have a fairly wide stop loss. So let's continue. Okay, another area is here. Price goes up, maximum it did when, okay, at least nice, it was a 1-to-1 right here, at least. So always, I have a question, do you use the automatic trading? Answer live. Okay, you were asking you want to do this automatic trading. You want to use this automatic trading. No, I actually don't use automatic trading. I use something called, this is my personal trading method, Smart Money Concepts. Just send it out into chat. So I usually use that, Hanin. I use Smart Money Concepts as a confirmation together with market imbalance. I stress that a lot, especially the amount of risk that I'm using. I only risk 1% per trade. So I don't go for those 5% trades where after, so let's say you risk 5% per trade. It takes you 20 losing trades to actually blow your entire account. With 1%, it gives me more time to cover back if I'm in a loss. And it actually takes 100 trades before you blow your account. So if you actually blow your account risking 1%, I think you need to rethink your decision on trading or to just take a step back and start to study more. Okay, I'm not seeing, okay, nice. Okay, here is another example of how it didn't work out. I'm just showing you guys things that don't work out and how it works out, just in case you guys decide to just do a stop, just follow using the indicator and then it hits your stop loss. So this is another scenario where it didn't work out. Always look to the left of the charts, especially here. Do you have a robot? No, I do not use a robot. I don't trade using a robot. I trade using a naked chart, actually. A naked chart. So what do I mean by a naked chart? I do not use any indicators when I am trading. Later, I will open up my personal chart layout. You can see. So I actually have my personal chart layout right here, where I'll show you later. There's 0 indicators involved. Okay, moving up. So you can actually see the win rate just following this. Camarilla pivot point is not that accurate. People can actually reverse price actually for this scenario, price reverse. This scenario, price reverse. for this price went kind of right before it's reversed. Okay, this is another scenario. It didn't work out. The overall trend is bearish. But then this area broke. You try to short. You try to short. Okay, it worked quite well. This is working well. The stop loss there. It's very wide. You get a 1-to-1, but it took quite long. I don't like holding trades for a long period of time. So how long did it take to even hit a 1-to-1? Wow, this is a very, very long trade if you're actually in it. Wow, it took 3 days, 13 hours just by using a sell stop, man. That's very, very long. Same thing with this. Wow. It took very, very long for a 1-to-1 trade. Okay, just in summary, don't just use a sell stop. Use some kind of confirmation before you enter, and also to minimize your risk to reward. Okay, this took 1 day, 2 hours. It's quite long, man. Okay, let's move on to the others. Let's move on to the other. Let's carry on with the presentation. Okay. Next, we have the Fibonacci. Okay, there's one more person with a question. Do you have a group to do smart money concepts together? Let me answer this live. Okay, do you have a group to do the smart money concepts together? Unfortunately, no. Actually, I don't. I learn it online, and then I have friends in real life who I actually discuss smart money concepts with, and then he's actually better than me at smart money concepts at the time of my learning. So I guess it's working pretty well. The concepts are pretty okay to understand, pretty easy to understand for me compared to other methods. What method do you use, Hanin? What method do you use for trading? Hey guys, just send into the chat what methods do you use for trading. I'm quite interested since we have quite a lot of people. The diversity of trading methods should be a lot. Regardless whether you guys are new to trading or price action. Akuma, you use price action. So do you trade like, do you know who is Raja Banks? Do you trade like him? Okay, next we have the Fibonacci pivot points. It incorporates the Fibonacci levels into their calculations. Is pretty much accurate, and they find the support and resistance levels. Okay, so the calculation is quite complicated. So I actually wanted to add it into the slide, but then it's already in an indicator, it's automated. So you guys do not actually have to know how this entire, all the pivot points that I was covering, how it's calculated. It's fine, it's not needed. Okay, I think somebody is asking another question. Okay, Hanin, you are asking about money management. What do you mean about money management? Do you mean risk management? Do share it into the chat. I can help to answer your question regarding that. Okay, risk management. I'll just do a quick one. So hopefully the others can benefit on that too. So let me clear this out. Let me take an eraser to clear this out. Is it not clearing? Forget it. Okay, so I risk 1% of my accounts. I only risk 1%. So let's put it into very, very simple terms. Extremely, extremely simple. So I have $100 in my account. Okay, maybe 1,000. So per trade, I only risk 1% of 1,000 times 1%. So every time I lose, let's say I lose the trade, hit my stop loss, I only lose $10. But if I have a risk to reward of 2 to 1, I'll get 2%, which is equals to $20 profits. So how do you calculate your lot size? How do I calculate the lot size for the 1%? So let's say I'll just draw it out. This is how a trading view looks like. So we have the stop loss level, the SL, the take profit area. So the SL, let's say we have a stop loss of 9 pips. 9 pips. But then including commission plus commission is equals to 10 pips. So we just take our $10 divided by 10 is equals to 1. And then you take your 1 and divide by 10. So you get your lot size. So your risk amount divided by the pips you are risking and then divide by 10 one more time. This is just a manual calculation. Okay, let's move on to the Fibonacci one, the Fibonacci thing that we are talking about. So have I answered your question, Hanin? Okay, the pivot points levels are determined by calculating the pivot in the standard method. We have the calculation method is pretty complicated. I'll not get right into it. Okay, and why people like to use Fibonacci is because many traders use the Fibonacci ratios. They use it for retracements and as a place of where they would like to close their trade or take profit at Fibonacci levels. So I also like to use Fibonacci to determine to add confluence. Confluence, let me write it out in case my pronunciation is not that good. So to add confluence to my trade, I like to use Fibonacci. So I also look to the left of the chart. Left to the chart as in, there must always be a reason on why there is a take profit area. Okay, okay, I'm not sure how to pronounce your name. I do apologize for that. Okay, you say you are a beginner. So I don't understand anything in day trading. Is this course okay for me or should I skip this course? Do stay around to listen. I can actually show you some methods where you can increase your chance of to have a better chance of a winning trade. I'll just simplify it down. Later I'll show maybe some form of smart money concepts, a very, very simple one later on. How I take it and I only take that kind of trade. Okay, next we have the Woody's pivot points. So it has a greater weighting on recent price data, very similar to the EMA, and it's used for intraday trading. So for Woody's pivot points, they are made up of multiple key levels calculated from past points. The key levels include the pivot point itself and multiple supports and resistance levels. So traders actually use these levels as a guide for future price movements when setting up trades. The calculation for the Woody pivot points differs from other pivots because it places a greater weighting on recent price data than the other variations. Okay, it's also widely believed that the high and low prices are results of emotions in the heat of the battle, while the opening and closing prices are a more accurate representation of the mood of the markets. Okay, let's move on. I can open the chart again to present the Woody's pivot points. Okay, I think it might be this. Okay, we have my screen has all these lines. How do I remove it? Can you guys actually see the blue lines on the screen? Can you guys see it, or is it only me? Do let me know all these blue lines that I'm actually looking at. There are some lines on the screen. You guys see all these lines right here? Oh, damn. Okay. I think it might be something to do with the drawings. Oh, wow. I got to... Okay, I found it. Oh, yes. Nice, nice. Okay. Found a way to clear it. Hey, thank you for confirming that. Okay, for Woody's pivot lines, just like the PowerPoints. Okay. They like to sell. Where are they selling? They're selling at the first resistance downwards, or they long it from the second support or the first support. My personal thoughts about all this, about entering like that, just by entering, oh, I have a buy limit set here, buy limit set here, stop loss below, buy limit. The thing is, I take it as it's some kind of gambling. I'll take it as this gambling, because if you just set your buy stop or your sell limit just at this level, along this level, waiting for price to go down, you are not adding confluence. What you want is multiple confluences to the left side of the charts, or multiple like confirmations that this trade might go in your direction, instead of just setting a buy limit, sell limit. I wouldn't do that. Okay, Woody's pivot points. Get to the chart. Okay, let's take a look. Since Woody's pivot points are for the intraday traders. Okay, no issue, continue class. Okay, sure. Okay, you can take a look right here. So, you have a short position, stop loss at the second resistance. This is using the Woody's. I'll just write out Woody's points. Make it larger a bit. Okay, maybe 20. It's too small. 40. Okay, Woody pivot points as usual. 1-to-1 risk to reward. So you're just trading zone to zone, just like a Fibonacci. Zone to zone. The first support and the first resistance. Also, later I'll show you guys how I enter using smart money concepts, a possible way that we can implement it together. Or if you guys have any methods that you guys are currently using and that I might know, do send it over in chats. I might try to implement it in. So same thing here. People try to long. Let's say you long it here. Your stop loss must be a considerable area. It's up to you where you want to set. So if you set it right here, your stop loss hits. But let's say in a scenario where you set your stop loss lower, can you show how to calculate the pivot points? We are actually using an indicator. I'm not calculating the pivot points, so you can actually search it up. The indicator that I currently use is by Chris Waters. And it's under indicators. We do not calculate the pivot points ourselves. If you like to know the calculation, I actually want to add it to chart, added it to the PowerPoints, but I thought about it. I think it's too technical and it's something that majority of people won't be using. They won't be calculating. They'll just see it and they will forget about it. Since it's already in an indicator, so I guess the calculation is not needed. Okay, but thank you for asking, Ronel Ramos. Okay, so the indicator that I currently am using is pivot points by Chris Waters. So this indicator is actually quite good because in the settings, we can show the floor pivots. This pivot I'm not presenting. So we are showing the Woody pivots, the Fibonacci pivots, and the Camarilla pivots. So it's like an all-in-one indicator. So same thing, with my, let's say in a situation where our stop loss wasn't hit, let's say we set it right here, stop loss right here. In such a situation, we still want a 1-to-1 risk to reward. Okay, this was pretty good to the next resistance, 1.16. But something I would not like to do. I don't like, as usual, I like to say I don't like to hold my trades for. This took 6 hours. I normally like to hold my trade for maybe around 2 hours, 2 to 3 hours, and I'm out. If not within the hour would be best. Okay. Let me show you guys. Do you guys want to know there are formulas for all styles online. Yes, there are many. It's all online, but I'm sure nobody is calculating this by hand, right? Like you wake up in the morning, you decide to calculate the pivot points, start to use all the calculations. So you can actually search online, Kamavira pivot point calculation. So you can see the calculation is so complex. There's so many calculations to do just on that. I don't think anybody will be just calculating, will wake up in the morning, open their chart and calculate, right? You'll be looking at multiple currencies. That's why the indicators are there to automate it. So by the time you calculate all this finish, maybe it takes you 15 minutes to half an hour. By then, you would have wasted your time because I'm sure a few people are looking at maybe 4-6 currencies. So to calculate all this out manually by hand, it will take 2-3 hours. Please don't do that. Just use the indicator. It will save so much of your time. Just open, close, open, close. It's very fast. So do you guys want to see how I enter a trade? So yesterday, I actually took a shot right here. I took a shot right here. Okay, it's not showing in the, cannot show an example. Maybe I can show a reversal. Okay, let's say I actually took a reversal trade that hit my break even. So let us zoom in on the 5 minutes. What actually happened? So if you guys are actually using smart money concepts, it's actually very, very similar to how a pivot is used, how a pivot is presented. Okay, now we are already in the final parts of adding the pivots into the strategy. So for my personal one, I like to use smart money concepts. So I like to add it in. I like to add this into my trading style. So just now I was saying the high and the lows. So the low and the high, you can see this area, hit, tapped, reverse. This area, tapped and reversed. So yesterday, I actually entered a long. I wouldn't lie to you guys, I entered a long right here. I was hoping for price to continue going up to clear this high. Why did I enter that? What was my confirmation? So I took this area, which is the low of the pivot. So I'll set it as the sell side liquidity. So I saw that area got cleared and price went up even higher. I expected. This is the buy side liquidity, the high side. I'll turn off this first for now. Okay. So when price on the M15 charts, it cleared this high, this small little high right here, using smart money concepts. So I like to call this break of market structure. BMS is called break of market structure. Okay, so moving into the 5 minutes. So I actually use 15 minutes to get the overall grasp, the overall picture of the market, what is going on in the market. So moving on to the 5 minutes, chart. So this was the 15-minute high that was broken. Price went up even higher. I tried to implement my personal trading methods. And then what did I spot? I spotted on the 15-minute charts, market imbalance. So you can see this area right here, this area. Price previously did not come into that area. So I was looking for price to come down, tap that area before price continue going upwards to clear this high right here. But I did enter. I enter right here. I entered there. So let me draw out this area. I entered there. Where's my long? With my stop loss at the bottom. And I was looking to the top. So actually to the left, there was something. I already cleared the chart. So all the way to the left side of the chart, there was a point of interest that I was aiming even higher than this specific area. So even for me, I do have my wrongs when I'm trading. It's okay to have wrong as long as you guys have a trading journal, you record it down. So the moment price came down, wow, I was looking at it yesterday. Price continue coming down. I know most of you guys, a lot of beginner traders, not you guys, a lot of beginner traders, when price start to go this low, or you start to close out your trade, then only for price to go back up, and then you will be thinking, damn, I could have held on to my trade and I wouldn't have lost money. So the moment price broke this area, broke that area, that low right there, cannot get the thing out. So the moment price broke that area, I set that area as the ideal invalidation level. What do I mean by ideal invalidation? To me, this area is no longer valid. The trade is no longer valid already. So I believe that if price broke this area, I was expecting price to possibly, I was just hoping possibly come back up before it continue going downwards to hit my full stop loss. So this is how I manage my trade. Not only do I have a stop loss right here, a take profits, an entry, I also have ideal invalidation. So you must know when your trade is not going right. You don't just hold your trade and you tell yourself, yes, price is continue going up. You see, it continue going up. And then in the end, it still went down and hit my stop loss. So I have an ideal invalidation level. So once I had two accounts. So one of my accounts, I set it to break even. My live trading account, price went up. I set to break even the moment price hit this ideal invalidation level. And thankfully, since we cannot control the markets, price could have just continued going downwards, hit my full stop loss. I set my trade to break even. What do I mean by break even? So I was just hoping possibly for price to come back up, and price did, came back up to my entry and closed at break even. For the other accounts, I have two accounts. For my other account, so I'm actually doing a challenge, a trading challenge. So on the other accounts, I actually cut off half of my risk. I closed off half of my trade right here and I let it run. So in the morning when I came to office, I took a look. Wow, price actually almost hit my stop loss, but it continued going up. So somewhere around here, I closed somewhere around here. So my take profit isn't that much. In the end, it was like something like this. It was pretty bad. It was only up around 9 pips and I just closed it out. I was busy with work, so I couldn't manage it. So I closed it. And thankfully, thank God I closed it. Price continued going downwards. And then it also cleared my stop loss. So this is just an example of how I manage my trade using smart money concepts and ideal invalidation level. It's very important to have that. A lot of people actually don't, when they teach online, they don't tell you anything about ideal invalidation. They just tell you to let the stop loss do its thing. But obviously, you still got to manage your trade when it isn't in your favor. Price is not going in your favor, especially in my favor last night. So can move on to another trade, a possible trade. Smart money concepts. So we have this level. Let me take a look back. Just want to share with you guys one trade that I took. Okay, this is the one I remember. Last week I took this trade. So I took this trade right here, but I actually closed here. I did not close it at here. If I say I close it here, I'm lying right to the chat. So why did I close it here? Why did I close the trade there? So if you guys look to the left, there is what do I see? I always like to talk about the market imbalance level. And same thing, I will be implementing what we are teaching today, the pivot points. So we have the high, the low, the high, the low, pivot points. So I set this as, that day I was looking at this area. So this area right here, it's the 15 minutes market imbalance area. So I mark it out. What do I mean by market imbalance area? See, if you zoom closer, this area, price previously has not come into. So I'll set it as the red area for a possible reversal. So when I was looking, what I also like to do is, there's something that's why I don't use indicators. I'm just showing you guys plain how I look at a naked chart. You can see all my indicators right here are closed. How did I answer? I like to mark out the Asian range. So the Asian range goes from, let me check the timing. Okay, I'm using the New York UTC -4 timing. So I'd like to do is the New York time, the Asian timing, it's from 1900 hours, 19 o'clock. So I like to mark it out until 12 midnight New York time. You can see at the bottom, it's 000 hours. So I like to mark it out very clean. My chart is just like that every single day. So I mark it out black, mark it out as the Asian range. Top, center. So how did I know that price was going to go up? How did I know that? So we go on to the daily before that, to the daily chart. Let me get this out. What day was this? 13 October. So I actually took the previous day high. It was here. And the previous day low. Let me get back into the 15-minute charts. To apologize for that. Okay. So we got it right here. The trade happened on a Thursday. So this was the previous day, Wednesday, high and low on the daily chart. So just put that into perspective. Previous daily high. See, I like to mark it out. It's just like that. I don't use any indicators. Previous daily low. So PDH, previous daily high. PDL, previous daily low. So I just do it like that. And then I wait for the London session to start. So between the timing of over here, from this area to 2 o'clock, I do not touch until London session starts at 2 a.m. New York time. So I do not touch until it's 2 a.m. onwards. So what do we have here? Price, what did price clear? Price cleared the Asian low. So I like to wait for the Asian session to be cleared, either the high side or the low side. So marking this out, we can say the Asian low got cleared. Asian low plus sell side liquidity. So this area got cleared. What do I mean by sell side liquidity? So in smart money concepts, we have this area. Look at this, multiple wicks. So many wicks to be cleared. So price cleared all of those together with the Asian low. and I was waiting for price to reverse. So price continue going up and it cleared this high. Take a look, it cleared this high right here. So I already marked it out. Break of market structure. Let's move on. So I waited for the 15 minutes to close before I start to look for an entry. So on the 5 minutes charts, since price already broke here, same thing, I like to enter by the market's imbalance. So on the M5, look at this very, very minute area. Very minute area. Let me make it straight. So you look at this minute area right here. Very, very tiny. Let me zoom in all the way. You can see previously, price has not tapped into this area. So I set a buy stop here. You can see price actually tapped into it. Very, very tiny. Price tapped into that area. And then I set my stop loss at the very bottom. Why do I set my stop loss at the very bottom? Because there is another market imbalance right here where price could potentially come down to before it goes up. So I set it as that with my take profits up to the M15 market imbalance, and I just close it right there. This is the M15 market imbalance. You can actually see this, the high is the previous day high and the previous day lows. It's also a pivot point, a pivot high and the pivots low. So in a way, I'm actually also implementing pivots into my trading, just that I draw it out manually. Okay, and then it became a 1 to 2.42 risk to reward trade. Okay, do you guys have any further questions regarding this trade? Do let me know in chat. Do let me know whether you guys are interested to learn more about these smart money concepts. Maybe I can ask IronFX. Maybe we can have a session about it in the future. I can share more about it. Any questions, do let me know. This is how I actually refine my trade without using any indicators. Okay, yes, it would be great. Very nice. Any validity in the marks pivot? Oh, I'm not presenting that today, unfortunately. I do apologize for that. We are interested in SMC. Yes, SMC is very nice because there are no indicators involved. It's just a plain chart. I'm just using a plain chart without any indicators. Explain more about SMC. Yes, I like the attitude, that learning attitude. That's how I felt when I first saw about smart money and Wyckoff. Let me open this up. So for smart money concepts, it's actually quite, so you can actually have a better understanding, I would say a better understanding in smart money concepts if you read up on Wyckoff. Read up on Wyckoff. Let me type it out in chat. Read up on Wyckoff too. Yes, the value gaps. The value gaps are taught by Inner Circle Trader. I think I mentioned it in the past webinars that I hosted. So Inner Circle Trader, I'll just credit him. Inner Circle Trader, ICT. He also taught about the fair value gaps, or also known as the market imbalance. So you can already see that I'm implementing. So this area, I took it as accumulation. So what is this? Wyckoff accumulation. That's why I asked you guys to read up on Wyckoff, where there's an accumulation area So it better explains why on smart money concepts after it clears some liquidity and it continues going up. So for this entry, as what Stephen has mentioned, value gaps, the fair value gaps, I took it from inner circle trader. And same goes to the market imbalance right here, inner circle trader. And this high and low thing is also the pivot points. So you guys notice I actually developed my own, I wouldn't say developed my own. I combined multiple trading strategies before and backtested it first before I implemented it on the live accounts. Okay, explain more about SMC. You can actually learn more about SMC on YouTube. I'm sure quite a few YouTubers are actually teaching it for free. They don't charge anything. You can learn it for free online. Okay, moving on. You guys can actually screenshot this. So what happened here was there was actually a news. Last week there was a news, so let's not get into that. You guys want to screenshot this trade down? Do screenshot this down. So when you're learning smart money concepts, you can maybe look back on this and kind of understand more in depth on why I actually entered the trade the way that I did. Any more questions, do let me know in chats before we end this session. I'll check with IronFX whether it's possible to hold a smart money concepts session into the future. Read up on Wyckoff. So if you want to know more about Wyckoff, a very, very simple one, you guys can actually check out. Let me show you guys. People, okay, Doge. So you can see this is my personal trading account. I'll send it to chat. That is my personal trading view account. I actually did a short series where I did it on my own at home on the educational series on the Wyckoff accumulation. So it actually kind of explain why. What does it explain? Why price after it clears the sell side liquidity, why price continue heading upwards. So you guys can read this, a short little education thing, Wyckoff accumulation part 1 and Wyckoff accumulation part 2. You guys can follow me if you want. Follow me on TradingView if you want. I've sent it over into chat. Okay. Any more questions? Do let me know. So let me send the link of this also, just in case you guys want. Yeah, I'll probably be writing more. So probably on the pivot points and maybe smart money concepts. So if you guys want to have a short, like a quick summary on what is smart money concepts or pivots, I'll be writing it down on my TradingView accounts very, very soon. So stay tuned. If you want, just follow me. So I got only 11 followers. Oh, someone followed me. Thank you very much. So we increased to 12. Just follow me. I'll be posting more educational series for free. You guys can learn. Hey, thanks. No worries, man. Okay. Any further questions before I end this session? We have a minute left. Any more questions before I end? Okay, thanks. There are no further questions. Hey, thank you very much for following me also and for the support through this. Okay, now we got 13 followers. Very nice. Hey, bye. Hey, thank you very much for joining me today, as usual. My name is Chen Yongjing, and I hope you guys have a good day and take